let's focus on Europe first. As aging becomes more of an issue in the sense that a larger and larger percentage of the population are over 65, that obviously has an implication to government finances. Are governments addressing what is likely to be the impact on their finances from an aging population and the social programs that people are expecting?
Aging has two effects. A smaller number of children means that our expenses for family policy, but also for education, are not growing to the same extent as they would if there would still be a baby boomer generation around in our educational system. So there are savings in the younger generation, at least relative to the GDP development. And on the other hand, a larger number of elderly citizens means usually a higher expenditure on pensions, on healthcare, and on a few other age-related issues, like daycare or mobile care that comes to your home. Now, I think there are two caveats. The one caveat is the pension age is not related to biology, but is related to a legal system that defines pensionable age either at a given age or in terms of years that you have contributed to a pay-as-you-go system. So this is something that can be changed. There is popular resistance to it, but the general trend in Europe is to increase actual retirement age, but also to have a higher statutory retirement age.
Which is logical as life expectation increases to have a later retirement age.
So it's kind of logical. Still yet, life expectancy usually grows more quickly than governments are able to adapt retirement age. So this favors retirement and pension systems like in Scandinavia that have a demographic factor built in, so where the adjustment is made automatically. The other caveat is that there is no functioning labor market for elderly citizens in many parts of Europe. So by just increasing retirement age without having labor market reforms, we're just shifting the problem from the pension insurance to the unemployment insurance. I think it's important also to address this. A higher retirement age where people actually really work longer and then retire later, so contribute for more years into the system and take out during a smaller period of time, is something that requires a different wage curve over a life cycle, so not so steep increases related to age or to tenure with a certain employer. It also requires a much higher training effort, because if you are 60, on average, you have left the school system some 40 to 45 years ago, and the knowledge that you acquired during your educational period usually is no longer valid, or at least part of this knowledge is no longer valid. So the question is how to bring fresh knowledge into the brains and how to bring fresh motivation into the hearts and minds of people whom we expect to work longer. So the question is about incentive structures on the one side, but it's also about keeping people productive and employable on the other hand.
As the EU has become more harmonized, has there been a movement toward labor reform or more flexibility in terms of labor, or is it still pretty much stuck in the old systems where there isn't that flexibility necessary to adjust to demographic changes?
The European Union represents a common labor market, so there is a freedom of not only establishment but also access to the 27 national labor markets, but we don't have a harmonized system when it comes to taxation, to social security, to labor laws. This is still in the realm of the 27 member states, and there's not much of an harmonization going on. We also still have 27 different pension systems in Europe.
The unions tend to be national within one country. None of them are pan-European?
The union acts as national players, but so do the employers' associations. I think that's the same. And there is very small legislation coming from Brussels into that area. The role of unions and employers when it comes to pension or to retirement systems is very small at the European level, but still very strong at national or member state level.